Bull Bear Buzz podcast for decoding markets, fueling minds. All right, welcome to the deep dive. You shared the red herring prospectus for Tankup Engineers Limited. They're looking at an IPO, right? On the SME platform of NSE Emerge.
That's right, Tankup Engineers. And yeah, our job here really is to sift through this prospectus, pull out the key stuff, and just give you a clearer picture of what this whole IPO involves.
Exactly. Because these documents can be, well, pretty dense.
They can be. Tankup operates in quite a specific niche, actually. Building these vehicle superstructures, tanks for fuel trucks, mining vehicles, infrastructure stuff, even defense.
So pretty core industries.
Absolutely, which makes this IPO interesting. Listing on NSE Emerge, that's a platform for smaller growing companies. It's a big step for them.
Okay, so this red herring prospectus, it's basically the company laying out its cards before the IPO. History, risks, financials, the whole deal.
Pretty much. It's supposed to be the detailed look for anyone thinking of investing. We're just here to help you navigate it, focus on what really matters.
Great. So let's start at the beginning. Tankup Engineers. Who are they? What's their background?
Okay, so they kicked off as Tankup Engineers Private Limited. That was back in November 2020, relatively recent.
2020.
Yeah, and interestingly, they had a change in their main objectives listed in their incorporation documents. Got a fresh certificate of incorporation in August 2023.
A change in objectives. That might suggest a shift in focus or strategy early on.
Could be. And then things moved quickly. Just this year, 2024, they converted to a public limited company in April, and the name officially changed to Tankup Engineers Limited in July.
Wow, okay. Private to public, name change. All very close to this IPO timing. That feels quite deliberate, like prepping for this specific move.
It certainly looks that way. The original subscribers, by the way, were Gaurav and Pankuri, names you'll see pop up again in the management. These changes likely paved the way for accessing public market.
Makes sense. All right, let's dive into the IPO itself then. What are the core details we need to get a handle on?
First off, the listing is planned for the SME platform of NSE, which is NSE Emerge. They got the initial nod for this back in January 2025.
And this is their first public offering, right? No trading history before this.
Correct. First time going public. So yeah, absolutely no past stock performance to look at. That's always a key point with IPOs, especially on SME platforms. No formal market history.
And the offer itself, how many shares?
It's an offer of up to 13,095,000 equity shares. Face value is 10 per share. The total money they raise, the aggregate amount, well, that depends on the final issue price.
Right, the issue price. How's that decided? I see mentions of floor price, cap price.
Yeah, that comes out of a book building process. Basically, potential investors bid, indicating how much they'd pay. This helps set the final price range floor, cap, and a price for anchor investors.
But that price set during the IPO, it's not necessarily where the stock will trade afterwards, is it?
Absolutely not. That's crucial. The IPO price is just the starting point. Once it lists, the market takes over, and the price can go up or down, sometimes quite a bit. Volatility is a real possibility.
Okay, and who can actually invest? Are there different categories?
Yes, they've structured the issue. There's a portion reserved for QIDs, qualified institutional buyers, think mutual funds, insurance companies.
Big players.
Exactly. Then within that QIB portion, up to 60% can be allocated to anchor investors who come in before the main IPO opens, hopefully adding some stability. There's also a slice for non-institutional bidders and, importantly, for retail individual bidders, or RII.
RIIs. That's likely most individual investors listening.
Probably, yes. If you're applying for shares worth up to 2 Beneficios, you fall into the RII category. The other categories have higher minimum application amounts.
Got it. And there's a timeline mentioned. Bid opening, closing, allotment.
Yeah, the prospectus gives an indicative timeline. It says the bidding opened Wednesday, April 23rd, 2025. But those dates for closing, final allotment, refunds, getting shares credited, and the actual listing, they're subject to change. Always check for the final announcements.
And applying itself, how does that work logistically?
It's mainly done through ASBA applications supported by blocked amount. Your application money stays in your bank account but gets blocked. If you get allotted shares, the money is debited. If not, or if you get fewer shares, the block is removed. It's pretty standard now.
Okay, that covers the mechanics of the IPO.
Yeah.
Let's switch gears to the business itself. What does Tankup Engineers actually make or do?
Their core business is fabricating these specialized tanks, mostly for mobile uses. Think mobile refuelers and tank trucks for the petroleum sector.
Right, like the trucks you see delivering fuel.
Exactly. And for mining, they make things like explosive vans, blasting shelters, for infrastructure projects, water sprinklers, mobile service vans. They also have products for the defense sector.
So quite a range, but all centered around these specialized vehicle bodies or superstructures.
Pretty much. It gives them exposure to several key sort of fundamental industries.
And you mentioned defense.
Oh.
Are they expanding there?
They seem to be pushing into defense and also aviation. The prospectus mentions orders from the Ministry of Defense, which is significant. And they're apparently participating in tenders for airport refuelers.
Interesting. That aligns with broader trends, doesn't it? Like, make in India for defense.
Absolutely. The prospectus actually touches on this. It notes India being, the third largest oil consumer globally, expected diesel demand growth. That supports their petroleum side.
Okay.
Then there's the government's big infrastructure push, PM Gati Shakti, higher budget spending, which should create demand for their infrastructure-related products.
And defense.
Yeah, the whole indigenization drive in defense, setting up defense industrial corridors. That creates a big opportunity for domestic players like Tankup. Plus, growth in Indian aviation and the aircraft maintenance MRO industry is another potential tailwind.
So the backdrop seems potentially favorable. But what about the downsides? What risks does the prospectus highlight?
Right. Risks are critical. We already mentioned the big one. No prior trading history for the shares.
Yeah.
Price discovery post-listing is uncertain.
What else?
Well, they point out a reliance on certain key products, especially refuelers. If demand for those specific products dips, it could hurt their revenue significantly.
Concentration risk, basically.
Yes. Also, the quality requirements, particularly for defense and aviation clients, the standards are incredibly high. They face customer audits, and failure to meet quality specs could mean losing business or damaging their reputation.
Understandable in those sectors.
Then there's supplier dependence. Their top 10 raw material suppliers make up a big chunk of their purchases, and crucially, they often don't have long-term supply contracts. That leaves them open to price hikes or supply disruptions.
That could impact margins or production timelines.
Definitely. And being in regulated sectors means needing government approvals, licenses, permits. Getting these renewed on time is essential. Any delays are a problem.
Okay. What other potential issues are flagged?
The usual suspects are there too. Risks from foreign exchange fluctuations, potential delays in their own expansion projects, changes in regulations impacting their industries, general economic slowdowns, political instability. Standard business risks, but important nonetheless.
And in today's world, technology risks.
Yes, they mentioned that too. Potential for technology failures, cyber attacks, data breaches impacting their operations. And they reiterate the IPO price risk that the market price could fall below the issue price after listing.
One last thing on risks. Surveillance measures. ASM, GSM.
Ah, yes, they do mention that. Stock exchanges can put stocks under surveillance frameworks like ASM, additional surveillance measure, or GSM, graded surveillance measure, if there's unusual price movement or volatility. This can sometimes restrict trading or margins, affecting the stock's liquidity and price. It's a potential factor for SME stocks sometimes.
Okay, a fair number of risks to weigh. Let's look at the numbers. What do the financials tell us? Any highlights?
The prospectus gives restated financials up to November 30th, 2024. And for the financial years ending March 2024, 2023, and 2022. You'd look at trends in revenue from operations, profit after tax, and earnings per share, EPS, across these periods.
To see the growth trajectory, profitability.
Exactly. They also provide the net asset value, NAV, per share for those dates. One interesting point they make is that there aren't really any directly comparable listed companies in India doing exactly what they do.
So peer comparison is tricky. Makes valuing the company a bit harder.
It does add a layer of complexity. You can't just look at the PE ratios of direct competitors easily.
And how do they plan to use the money raised from this IPO?
It's laid out pretty clearly. A chunk, estimated around 350 lakh, is planned for repaying some existing debt.
Deleveraging, okay.
Then a larger amount, 500 lakh, allocated for FY 2025-26, and another euro 500 lakh for FY 2026-27, is earmarked for funding working capital needs. Basically money for day-to-day operations and growth.
And the rest?
The remainder is for general corporate purposes, so primarily debt reduction and fueling operations.
Got it. Who's running the show? Who are the key people at Tankup?
The main figures are the promoters we mentioned earlier, Gaurav Loth, who's the managing director, Govind Prasad Luth, the chairman, and Pankari Luth, who is the whole-time director and CFO.
So it seems quite family involved at the top promoter level.
It appears so. The prospectus also lists independent directors and the company secretary, outlining the broader board and governance structure.
And the promoter shareholding. Who owns the company pre-IPO?
The promoters listed Gaurav Luth, Pankari Luth, Govind Prasad Luth, and an entity called Tankup Petro Ventures LLP hold the shares before the public offering. The prospectus details the exact percentages for each. That shows their skin in the game.
Right. Okay, so wrapping this up. As you look back at this deep dive into the Tankup Engineers RHP, what are the absolute must-remember points for you?
Number one for me is always the price uncertainty post-listing, especially for an SME IPO with no prior market. The issue price is determined by book building, but the market price afterwards is anyone's guess.
And the associated risk.
Absolutely. SME investing carries higher risks. You could potentially lose your investment. That needs to be crystal clear. Also, remember potential capital gains tax if you sell shares at a profit later.
What else?
The company takes responsibility for the prospectus's accuracy, and there's a compulsory market-making arrangement for 3 years on NSE Emerge. This means a specific broker is obligated to provide buy and sell quotes, which is supposed to help with liquidity, at least to some extent.
Okay. So, summarizing our discussion, Tankup Engineers is in a niche manufacturing space, making specialized vehicles, superstructures for essential sectors like petroleum, mining, infra, and defense. They're growing, pushing into defense and aviation.
Right, and this IPO on NSE Emerge is their way to raise capital, mainly for reducing debt and funding working capital.
But there are definite risks. Reliance on specific products, suppliers, regulatory hurdles, quality demands, and the inherent uncertainties and potential volatility of an SME IPO listing without a prior market history.
That covers it pretty well. We've tried to pull out the core information from this document to give you a foundation. Hopefully you can now look at news or further research on this IPO with a bit more context.
Exactly.
Yeah.
We hope this deep dive helped cut through the jargon and gave you a clearer view of Tankup Engineers and their offering. Maybe it sparked some further questions for you to explore.
Definitely. And look, before we finish, we absolutely have to state this clearly. The information provided today is strictly for educational purposes. It is not financial advice.
That's right. We're not SEBI-registered advisors.
Investing in stocks, especially IPOs and SME stocks, involve significant risks. You could lose money, potentially all of your investment. It's crucial that you consult with a qualified, SEBI-registered investment advisor before making any investment decisions.
We are not liable for any losses that might arise from decisions made based on what you've heard here today.
And for unbiased market updates, please do consider subscribing to the Bull Bear Buzz podcast.
Thanks for joining us on The Deep Dive.